Zacks Rank Buys, stocks with a short-term buy or strong buy recommendation. Now, here are more Zacks Rank Buys. Here now are a couple of more aggressive growth stock picks as submitted by Bill Wilton, our aggressive growth stock strategist here at Zacks.com. W.R. Grace & Company is one of them. GRA, the ticker symbol. Now, they've been around for a while.
Yeah, what they do is they make catalysts and other products for petroleum refiners and other plastic and industrial applications. People that make those specialty chemicals, they need their products to go ahead and facilitate that process. Their most recent quarterly report was on July 26th, and it was fantastic. They saw their revenues rise 21%. That led to a 46% increase in net income, and they beat by an impressive 22 cents with $1.11 per share. We're also seeing the estimates start rising on that news. As you can imagine, that's pushed it to a Zacks #1 ranked strong buy. Very encouraging there. And the valuations are still cheap because we are seeing the outlook rise just as fast as that price is. So it still does have a fairly attractive valuation component at this point. And this next chart will give you a pretty good idea why. You can see the year-over-year growth in those full-year consensus estimates there. And then we're also seeing those estimates move up throughout the year. That way, when you see the price moving up like that, it's good to see that the estimates are moving up as fast, if not faster than that. They also recently acquired a Belgian waterproofing company, and that's part of their ongoing strategy. They're trying to grow through their organic business, reinvest in themselves, but they're also out there looking for potential acquisition targets. So, we should hear more activity like this in the near future as well.
All right, this next one has kind of a creative name, Electronics for Imaging, Inc. EFII, the ticker symbol, and I must admit, in all my years, I have not heard of this company.
Yeah, this was one of my first times looking at them as well. They make digital printing products like servers to hold those images, inks, the extremely wide printers, and software, which is actually what drove their most recent results. They saw a lot of strength in their software application business. So on July 21st, when they reported earnings results, they saw their net income almost triple, which was fantastic. Reported 12 cents a share, which was a penny better than expected. Their revenues were up about 19%. This is their 5th consecutive earnings beat. We also are seeing estimates move higher for them, driven by those results. So now we're expecting 80% growth for through 2011, then another 24% in 2012. So there's definitely, plenty more growth to be had here. And one of the things when I mentioned the consensus estimate about this, there's only one analyst that's contributing to that. Some people might get skittish when they see that there's just one person. But, that's part of the risk. If you want these under-the-radar stocks that have potential to really shock some people, you need less people to know about them. Having, limited analyst coverage is one of the ways to do that. So it's more of a high-risk, high-reward type situation.
So do we infer that just because there's one analyst following the stock that this is a relatively new company, or not necessarily?
Not necessarily. Analyst coverage can range for any number of reasons. We have a lot less sell-side analysts out there than we had in the past, so sometimes it's just lack of coverage because we don't have as much resources. They focus on, a lot of the larger companies, and with the actual amount of small cap companies out there like this, trying to find, one that's adequately covered or has a lot of analysts on it is tough because they're spread so thin. So, and
who knows how many analysts covering a company is an adequate number anyway.
Exactly.
Yeah.
So there's a lot of pros and cons there, but I view it as a high risk, high reward type of a situation.
Okay.
So
just thought I'd ask.
Yeah, and one of the times you'll see a stock bump up is when a new analyst initiates coverage and they initiate it with a buy. So if something's not covered by many people, there's more of a chance of that happening too.
Okay.
Like the last company, we're also seeing a favorable, earnings forecast trend here. This one's a bit more choppy because of the one analyst, but we are seeing that year-over-year growth, and this analyst is not afraid to supply us with some upward estimate revisions, which is very good and bodes well for the company.
All right. Do you own either of these two?
I do not.
There are more stock pick ideas that you may want to peruse, and you can do that on our homepage, Zacks.com, because we put 4 new ones up there for you daily, one in each of the investing categories that folks like Bill write about on Zacks.com. With Bill Wilton, I'm Terry Ruffalo.